Good morning, everyone. My name's Rodger. I'm CEO of Jindalee Lithium. We're a pure play, but Australian listed, US-focused lithium company focused on our McDermitt Lithium Project in the United States, and we're pleased to walk you through the project today and why it's a compelling opportunity. Forward-looking statements, etc. See our announcements for further detail. Why Jindalee? We're focused on our McDermitt Lithium Project, which is one of the largest lithium projects in the US. Until January, it was the largest, 21.5 million tonnes of contained lithium carbonate. We're pretty strategically located in the McDermitt caldera in the western United States. We're right next door to Lithium America's Thacker Pass project. They're a $1 billion company. With a circa $950 million joint venture with General Motors and funded through concessional loans with the US Department of Energy. And really, we completed our PFS, which demonstrated sort of similar metrics. It's a generational project producing low-cost lithium chemicals right in the US. So really pleasing set of results there that I'll step through later, and really done to a high-quality standard with Fluor Corporation leading the work for us. In terms of, I mentioned that strategic positioning of the asset. Clearly, we're aligned with US policy on domestic and critical mineral security. We've really built out strong relationship with different parts of the US government. We executed a cooperative research and development agreement with the United States Department of Energy last year. We've already well progressed on a potential Department of Defence funding application, which would co-fund the next stage of work, including a feasibility study. Sorry, co-fund, I should say. And then we're on federal land, so we're set to really benefit from Donald Trump and the new administration's efforts to streamline permitting on federal lands, and we're starting to see that play through more tangibly on the ground. In summary, we have a highly strategic asset. We're very cheap relative to other lithium players, which I'll step through in a second. We're well capitalised for the work program ahead of us, with it, funding in the bank, and we've got a number of really key material catalysts, which I'll step through. And so, real opportunity to position investors ahead of a recovering lithium market. Before we get into too much on McDermitt, I wanted to spend just a brief context on Jindalee. We've been listed for 22 years. For 18 or 17 of those years, we didn't raise any capital because it generated value through exploration success and trading assets. So we've got a track record of creating value for shareholders. We've got a very tight register with only 74 million shares on issue. And we've got a really loyal supporter base and high net worth base, including Lindsay Dudfield, who's our 24% shareholder and executive director. I mentioned we're incredibly cheap, and it's really setting the context here. The irony is that Jindalee is one of the most advanced lithium projects, lithium clay projects in the United States. We're one of only 4 with a reserve, but clearly we're obviously valued one of the lowest. That's on the right-hand side. On the left-hand side, you can see on the resource multiple, our peers that are sort of earlier stage than us, located similar asset quality, similar locations, but traded a multiple higher than us. And so really we've flown under the radar. And so part of the rationale here meeting investors is trying to raise the profile of the company and highlighting the value opportunity for investors. So a bit more about our project. Like I said, outlines a very long life operation. 63-year mine life initially, huge production of circa 47,500 tonnes of lithium carbonate production capacity. And that's only using 15% of the existing resource base. The thing is really massive, and there's a whole lot of embedded optionality that we haven't yet really been able to outline to the market. It's low cost operation, predicted to be bottom half of the cost curve, and really competitive against our North American peers. In a lot of ways, the economics of these sort of lithium clay deposits look like a copper porphyry or a big oil and gas play in terms of big capital investment, but high margin annuity type cash flows. And that's really attractive to strategic partners. And I guess the way you unlock value is bringing in those partners to help fund and de-risk the asset. And that's a core part of our strategy, which I'll I'll touch on in a second. The last two bits I wanted to leave you with on this slide is that it's a really high quality piece of work. I mentioned fluid. I managed our test work, did our engineering. We've tested everything from processing from mined ore all the way through to battery grade lithium carbonate, producing a battery grade sample in the middle of last year. And then we've got really high quality engineering. We think there's lots of scope to improve, but we've got a really solid base case to work off. I'll quickly step through our verify flow through to give you a bit of a flavour of the asset. As mentioned, we're in the McDermitt caldera on the border of Oregon and Nevada in the United States. Thacker Pass, I mentioned before, is down one end of the caldera. We're up the other end. There's clearly we're well positioned in terms of infrastructure right next to a large interstate. The power line runs past the project, and there's a major rail hub in Winnemucca just to our south. The project, these are our claims. What I'll quickly highlight is, the area is, somewhat degraded. There's some history of mercury mining in the region. This is a mercury mine that just sits just outside our claims. Our claims are behind this mercury mine, but there's probably one of half a dozen, I should say, in the region. And the land use is really grazing. It's sort of sparse vegetation, etc. And it just spinning around here quickly. McDermitt is a previous mercury mining town. It's a lower socioeconomic region, one of the more disadvantaged tracts in the nation, and you can see sort of the caldera around here with Thacker Pass location just down there. Moving on for our pre-feasibility study, shallow open cut mining operation, very cheap. The ore is at surface, strip ratio about 1-to-1. The really low mining cost, partly due to the fact that it's unconsolidated free dig material, and then two-stage processing, beneficiation to upgrade the leach feed before a atmospheric acid leached, and a series of refining steps to produce battery grade lithium carbonate. Now, there's a lot of opportunity to improve that beneficiation step, which will potentially reduce the capex and opex. And it's important to note that we've really delivered the pre-feasibility study on a tight budget. We've done lots of, we've recognised lots of opportunity to improve, particularly on the beneficiation as part of future phases. I'll skip over this one, but essentially, that's a cross section of the ore body showing, basically from surface. The key focus is this higher grade 2000 ppm. This deposit extends. What wasn't a typical pit optimization. It doesn't really optimize because everything gets pulled in. We've now focused on this 2000 ppm material. What you can see is that there's gaps in here where we haven't drilled, so we think we can really build out that 2000 ppm material. We've already got circa 40 years at that, so it's really about just building on that base. In terms of the market, I think we're clearly at peak negative sentiment in the lithium market at the moment. Clearly unsustainable. You've got demand growing very strongly, and you've got supply being shut in and projects being delayed. And I think you were starting to see strategics making placing their bets in the bottom of the market through a number of different transactions, and that bodes well to a market recovery. The $1 million question is when we'll see that deficit emerge with groups. Previously when the market started coming off, they were saying 2030. Last year they changed their tune to consensus 2028. Now we're starting to see some of the more respected analysts saying it could be as soon as the end of this year or into 2026. So we won't know when it tighten up, but the fundamentals are set to play out, and we can see that there's a shortness coming. In Well, I'm just running onto time here, so I'll probably skip over this slide. In terms of our catalysts ahead, we've got a major milestone in terms of permitting this year. Our exploration plan of operations. We've just published our environmental assessment for public comment, so we're well advanced in that process, and that'll allow us to do a lot more work on site. We're very close to appointing a couple of strategic advisors to help bring in a potential partner with our strategy, to bring in a partner to help fund the feasibility study and the next stage of work. And so we expect that process to be underway very, very shortly. And like I mentioned, we've got a Department of Defence grant application afoot, and we've just seen in the last week, another executive order from Donald Trump, basically putting more money into that bucket of funding. So we still uncertainty around that, but the direction of travel is really positive. So in summary, highly strategic asset, very cheap valuation, with a lot of milestones this year ahead of us, which we're well funded to complete. So really an opportunity for counter-cyclical investors to position themselves ahead of a lithium market recovery. Thanks.